Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 17th of August intraday analysis. On this video, we will cover some news first and we will just go ahead with our charts. This morning, we have received the UK inflation data and it is higher than expected. Right now, double-digit inflation in US. It's 10.1 in inflation rate in UK, and this is mainly because of the high energy prices. So a lot of people are just talking about like a energy dependence of Germany to Russia, but also UK is not directly importing their energy from Russia, but from European countries. So first Russia to Europe, then Europe to UK. This was the chain. So right now, this chain has just like disrupted, and then this we see the just chain reaction of the collapse in prices and stability. This is just like a rising the fears of crisis, energy crisis. This was the fear. All right. Another important thing is today is real estate numbers. Retail sales in US. So expectation is a bit slow down because Fed is rising the rates, but there is one important number. US credit card credit card debt is rising. That means, in my opinion, it will be something more than expected. Retail sales will just be higher than expected, and then we will just see kind of first joy of this in stock market. Then people will just start to talk about Fed possible hawkish statements about this. And also tonight we will receive FM's minutes, and then we will just get the details of the recent the previous Fed interest rate decision meeting, who said what. We will see all of these details. This was news. All right, let's start with our first chart. The first chart is US oil. And crude oil prices are just, as you can see, in a channel declining. This was the key level. It just spent a lot of time on this, and then each attempt, just as you can see here, just from this point and rebounded, but it didn't happen this time, and then it just collapsed, another rise and another decline. But it's happening, it's just behaving in this channel. So the critical level is $85. Why $85? Because just before this in the February, just before this Russian invade of Ukraine, already was trading at these levels. So almost like it's spent 6 months with this invasion, and we are just spending that time. After 6 months, we just came back to same point. We have just spent a lot of time and then a lot of money to just to come back to this level. And important is, as I said, 85. If it cannot, in my opinion, it won't hold that one, it will just decline more. There are a lot of recession thing, and then liquidity in the market is just drying up. So there will be some more attempt on higher, like you just 90 and then close to 88, but this channel will probably will work, and then this line will just head to $75 level. If it happens fast, if you just see this decline like 80 70 78 and $80, and for the last 10 days of the August, then we can just talk about the inflation of August in US keep going down. But if we don't see that happen, if it stays at this level around $90, then we will see month over month inflation a bit higher or same level, because the prices just declined, as you can see here in July. It just declined from at the beginning of July from $100 to $90 throughout the July. But in August, in the beginning of August, it was 93, and if it just goes on this level, it will be just $6 decline, and it won't make not much difference on that one. So this is the reason of that one. But one important thing, even if we just catch $70 in September, the base effect will just work, because in September 2021 it was high already, the price. So the gap between this year and last year will be tightened, and then we will see continuation of this annual energy price decline. That's my opinion. All right, let's look at our second chart.
You are ready to win with us. GAN Markets.
All right, our second chart is Bitcoin. As you can see here, Bitcoin is just from the end of since the end of July, and then beginning of August, just trading in this tight channel. The volatility of the market just gone with the expectation of peak inflation, peak rises, and just another a few 75 base point, like it is 25, and at around a 3% interest rate hike, or 3.2% rate hike in US, and that the market is just evaluating that one. But if you ask me, these recession talks will just definitely affect the market of crypto market so much, and these inflation next month and this unemployment rate will affect the price of that one. So the next 10 days is critical. If we don't see passing over 25k, it will definitely come back to 20,000 levels in Bitcoin in the next weeks. That's my prediction. Let's look at our last chart. All right, our last chart is euro dollar. As you can see here, euro dollar is on a sharp decline, and is 1.01 level, just keeping that one. Yeah, can you imagine that? If someone just told you that just a few months ago, it will just come back to a parity level, even a test just slowly that one, nobody will believe that. But right now we are just facing that situation, and these levels are just working like that. So these tight channel, between parity, $1, €1 parity, and 103, it will just become our main thing for next couple of months, because Fed will just be hawkish, and then it will just go on raising, and slightly ECB will be a kind of a hawkish, but at the same time ECB, there are a lot of factors. In US there are risks, but at the same time they are far away from this Ukraine-Russia war. This is affecting the market in Europe so bad. The only chance of these a euro going higher is end of this Russian invasion and declining oil prices and gas prices. If they just if those things happens, then Europe can just take a fresh breath, and then take a breath, and then it can just go higher, but not for long term, because things have changed. If you ask me, in my opinion, things have changed for long term. There will be no cheap Russian gas. There will be a high cost of transportation, and then instead of pipelines, there will be LNG, other formats, or infrastructure for renewable energy. So they will just rise the price of energy in Europe, and then this will just take the competitiveness of European industry. That will be the balance of trade balance of Europe will be in negative territory for a long time, just similar to USD Japanese yen. You know, like that is also like because of this high debt level and productivity is losing. It will just keep on these levels for more years. That's my prediction. Alright, thank you so much for watching us. We will be together in more news and then we will cover more charts with you. Have a nice and profitable day. Bye.